Hi everyone, welcome to Thursday. So we're going to do the normal share and review. Now before I get started, this is just obviously education purposes only. It is not personalised advice. If you do need personalised advice, by all means talk to your own financial advisor or share broker. I want to talk today about a company that someone was talking about just yesterday over coffee, and they were explaining to me why it was a good company and that it was really unfortunate that they had some news come out that made their share price go down. But after all, they're a really, really good company. So I'm going to show my screen and we'll take a look. Right, here I have got Pacific Edge Limited. So they are on the NZSX 50. And like I say, this company, someone was talking about only yesterday, saying how good it was and that it was really unfortunate that some bad news came out around the company. Apparently it's to do with pharmaceuticals. I don't know about the company in that regard. I don't tend to look at that sort of thing. But this person went on to say that there was something that wasn't approved in America because of their testing, and that it's going to take 2 years and they're going to get the testing modified so that they can offer this whatever drug or whatever it is into America. Now, to me, all of that's just noise. I let the charts tell me exactly what I need to know. So I've pulled it up. And as you can see here, this is the 2-year period. It's over 1 week intervals. And it's just been in a downtrend. So we just go back here to this first candle. So that was back on the 19th of December 2021. It was trading at $1.31. As you can see now, it's trading at 9.8 cents. That's not a good share in my view, because you've ridden it all the way down. Let's take a look at the 5-year one. There we go. So 5 years, again, this is a weekly interval. Hey, yes, it started trending down. We had a breakout here around middle of June 2020, and it peaked up around middle of September, 12 months later. Now, I do remember holding on to Pacific Edge or investing into Pacific Edge some time ago, and it would have been through that period. And it was a good share for me because I used what I refer to as a trailing stop. Okay, so as my share moves up in price, I adjust my trailing stop. And the trailing stop, what that does is it protects me so that at some point when the share starts coming down, then I'm going to get taken out. Okay, it will naturally hit my stop and the broker will automatically execute it, and it means that I get sold. No, I'm not going to sell at a top of a market. I'm not fortunate that I can pick the bottoms either, but I would have done my research and noticed that it was trending above the moving averages, and let's ride it out. Okay, so even if you bought around this point, middle of beginning of December 2020 at 98 cents, and even if you got out over here somewhere at $1.13, it's still a reasonable profit. You know, you can't complain at that. So let's go back to the two-year chart, and we'll just put these moving averages on just to get an idea. So I used 30, and we'll use the exponential, and I will also put on the 15. Now, these aren't rocket science. They're just what I use, okay? It's the idea with doing this is finding something that works for you and being comfortable and sticking with it. Don't chop and change. In other words, don't use 15 and 30 on one share and then go and change it to 50 and 20 on another. You've got to be consistent the whole way through. So as you can see here, basically from 2 years ago, it's just been in a downtrend. The share has been trading below these moving averages, and that is always an indication that potentially negative things can happen to the share. Now, I spoke before about using a trailing stop. So a thing that I've got on the bottom down here is an ATR. And when I go into a share, whatever my purchase price is, I tend to go 3 times whatever this average true range is. That's what ATR stands for, average true range. So at the moment, this share is saying that in a given day, or given week, so I'm on a weekly chart, you could find that share price could move about 3 cents. Okay, and in a share like this, obviously if it moved up 3 cents, that's going to be a third profit, which is absolutely fantastic. But in my opinion, you can actually buy stocks that have yes, they might have a higher value, but they're going to move at least 3 cents in a day if that's the quick wins that you're looking for. But what I do is I take, in this example, because I always trade on a weekly, I'll take 3 cents and I would times that by 3, and that is going to take that off my purchase price. That's going to be my stop loss. So 3.6 is a 9. So basically, I'd be hit out at 0 if I applied that to this share. But there's no way I'd be into this share anyway. It's trading well below those moving averages. I'll take this off, and I will also see if we can put the NZSX 50 on there, given that's the stock market it's on. Right, here's the New Zealand stock market trading well above. Okay, so basically the New Zealand stock market is about 10% down over the last couple of years, and Pacific Edge is 92% down. So that's a huge fall. I don't think there's anything more to say about that. I'm going to stop sharing my screen. So that's just what things that I look for when I'm buying a share. So just because you're holding it doesn't mean that it's a good share. And there are a lot of people out there that will tell you, oh, it'll make a comeback. Not, hey, it might do. I don't know. But not all shares make a comeback. And to be honest, when I started in my share trading career, I made that mistake of writing a share all the way down to 0. And in fact, even now, that particular share is now undergoing corporate action or legal action, because obviously there was something that was happening behind the scenes within governance. But I learnt my lesson. So now I always use trailing stops to protect my capital, because if you run out of capital, you can't play anymore. And I was listening to a podcast this morning where somebody had gone bets all in on a particular company on the Australian Stock Exchange. I can't quite remember how much money they put in. It was very, very little, but it went up over so that their value invested was over $7 million. They then wrote it all the way back down to their purchase price, which ended up being about 15 cents. And in the same podcast, the gentleman was talking about a particular company on the Australian Stock Exchange that made over 3,000% in profit. And again, you've got to use those trailing stops, because that's what takes you out and ensures that either you protect some of your capital, because if you apply appropriate risk management, then you can live to play another day. But it also, as a share is trending and it does rise and go in your favor, eventually you'll have your stop in profit, which is great. You won't get taken out at the top, but you will get taken out of the market at a price that's comfortable for you. And hey, if you've been fortunate and you've ridden a share and it's gone up, gosh, even if it's gone up double, and there are a lot of shares that will actually go up way more than that, but not all of them, then hey, to have a good chunk of that profit in your pocket is certainly a good place to be. So I really hope that's helped. If anybody wants me to have a look at any shares that they are interested in, by all means, just message me and we'll see what we can do. Have a great day.